Tonight, guys, I'm going to show you just a couple of real basic tips just to show you guys a little bit about trading, because a lot of people have no idea what trading really is. I'm just going to show you on some charts, if you guys don't mind. I'm going to share my screen and just show you a couple of real basic tools that we use to trade the market. Now, these are some of the most basic, simple tools that you learn right at the start on these courses, but you've got to also understand that sometimes simple is best. So what support is, what we're actually looking at here with these candlesticks, these are virtually giving us an indication of price action within a specific time frame. We can see the price came up on this asset, it moved sideways, and then it came down. Now these candles here represent some level of support. You can see here that the price has held within this range for a period of time. So we can put a line here. This just indicates as a visual representation of a level of support where buyers are happy to come into the market and purchase this asset. Now, on the opposite side, we've got what's called resistance. So we're looking at these levels here where prices come up multiple times, hit it, and come down. It has failed to break through. So now that we've got a level of support and a level of resistance, we can now set up our trade on what we believe the market may do. So we might put a position down here with a stop loss to ensure that we don't lose too much if we're wrong. And we're looking to take an entry down here if the price comes back to our support level. And then if it comes up to our resistance level, we're going to close our trade and hopefully take some profit. So I'll play this through now so you guys can see. We get our entry, price goes up and hits our target, and we just took 16%. Okay, so that's a very, very simple trade, and that would have taken only a few days to play out. Now, the next thing I'm going to show you guys is market structure and trend lines. Now, market structure is really, really important. You can build tons of different strategies using market structure, building off market structure, but it's something that we use to identify trends. As long as we know the trend is still intact, we can continue to trade along with the trend. If the trend's up, we know we can take an entry and continue to ride the trend up. However, if the trend decides to change, we now know the market sentiment has changed and we might need to do something different. So I've just marked here a level of HH, which stands for higher highs. So we can see the market came up to a high and then it pulled back, and we've got a HL, which stands for a higher low. Now I'm just going to clone these just to sort of show you as the price continued to roll up. We got another higher high because this high was higher than that high. I'm going to clone this one. This low was lower than that low. I'll clone it again. We got another high. We got another low. And we got another high, so on and so forth, right? So now we can see the market structure is up, the trend is up. Now what I'm going to put on here, this is just, again, a very, very simple tool, which is just called a trend line. So we can see here that the trend has respected this trend line and the market structure is facing up. Now we can either continue to trade with the trend. However, if the trend decides to break for whatever reason, the market sentiment changes and the trend line actually breaks, we can look to capture the market on the way down. So this is a really weird thing for people to understand, is we actually make money when the price goes down as well. Okay, so what we would do, sorry, I'll just push play for a second so we can see that the trend line actually breaks. So now we've seen that the trend has broken and we're no longer on the way up. So what we can do now is look for those levels of support and resistance like we did before. So we might see a level of resistance here, and we can identify a level of support back here. And now we look to place a short position, which is essentially trading the way down. Okay, we can have our stop loss up above market structure, and we'll push play again. And we can see the price comes up and we get our short position, and then the price comes down and we can take profit. And if you can understand what's happened, this is just the latest move on Bitcoin. So even though the price of Bitcoin just recently dropped, we can still capitalize on that move and make money on the way down. And that would have been a 49% trade.
Now, the last thing I want to show you guys is compounding through risk management. Now, here at MBA, we have such a big focus on this idea of capital preservation as much as capital growth. I'm sure a lot of people who've been in this space, I know I was one of them at the start, you might have had a week where you made a bunch of money, your trades kept going the right way, or you kept buying an altcoin and kept going up, and then maybe in one trade or one day, you lost a whole week's worth of profit. Now, the idea in this space is to minimize those losses so that one loss can't take away all your winners. Now, just applying what we've learned, let's say you can see a level of support here, a level of resistance, previous top, And all we want to do is, let's say we want to take a position from down here and take profit up the top. So you place a trade like that. What this represents is a point where you're going to get in, a point where you're going to take profit. And if the trade goes the wrong way, this is a point where you're going to exit the trade and just accept that you lost a little bit of money. Now we teach you how to calculate it. So in this space, you only ever lose 1% of your trading account. Now what that means is if you had a $100 account and you risk 1%, it means every single one of these trades, you're only going to lose $1. If you had a $1,000 trading account and you risk 1%, you're only ever going to lose $10. Now let's play a little bit, see what happens. So it came down, hit our entry, and then we go along and it takes our profit. Now we're going to play the same concept and we're just going to repeat just to show you how easy this is. Now we're looking for a level that gets held as a level of support. And we can see here, price is coming back to a level of support. Let me get rid of these ones. We've got to take profit. And we're recognizing right now, Bitcoin's overall heading up. So we're looking for positions on the upside rather than the downside. Let's say we put a trade, same deal. This one, entry, a stop loss, still just risking 1% and a take profit at previous resistance. I'm going to press play. Price keeps going. We come up and hit our take profit. So now we've had two winners, and we'll come back to this in a second. But let's keep going and play it one more time. So, got a level of support. Let's see where price goes. We want to confirm that level of support. That's the confirmation, and that would have been our entry, and I didn't get the time to put it in. But let's say that's the third trade you're looking to take. Exactly the same setup. Now on this trade, you went the wrong way. You got it wrong and you lost a bit of money. But remember, this means we only lost 1%. So we bring these back up. You can see in each of these, it says a risk to reward 3, 5, and 4. Now what that represents, for every 1% that you were risking, you're looking at making 3%. You're looking at making 5%. So how that works out in the end is, even though you lost one trade, in the first two trades you made 3% and 5%. In the last one you lost 1%. And in total, you've actually grown your account now 7%. And it means that your loser didn't knock out all your winners. And this is how risk management and compounding that growth can actually help you stay in this game for the long run and be consistently profitable, so that you're not just gambling and having a lucky spree and then that goes all the wrong way. Now, guys, I hope you got something out of that. I'm going to pass it back to Russell to keep going. But hopefully, guys, we catch you all in Sparta sometime soon.